Good morning, this is Sam Gurung again bringing you this morning's market report. Yesterday I talked about the rout we saw in global equities overall, some calling it an equity bloodbath. Today I'll be looking to summarize what happened yesterday and the extent of the damage it caused to the equity markets, some calling it a shockwave, some correction, some obviously start of another sort of financial crisis, etc., etc. So to touch on it, we saw $1.3 trillion get wiped off global major indices yesterday. FTSE 100 was down 4.7%. In fact, 74 billion pounds got wiped off FTSE 100 yesterday. Chinese shares was actually down 8.5%. In fact, $300 billion wiped off Chinese equity indices. In the last four sort of trading days, Chinese shares have plunged 22%. Its worst rout since 1996. In Europe, Stock 600 was down or closed down 5.3%. In fact, at one stage, it was down 8.1% in a day. So that shows the extent of volatility we saw yesterday. In fact, talking about volatility, it soared 90% just yesterday alone. Now, we've been talking about China for a while. We know the reason, which obviously lies in Chinese slowdown and most importantly, the lack of government intervention moving forward. In July, when Chinese shares plunged, we saw Chinese government come in, pump sort of money in and support the economy. But this time around, it hasn't done it. It seems unlikely, and on back of that, lots of analysts, economists are calling for this rout to sort of continue. But yesterday was basically one of the worst days in global equities, in some indices going as far as sort of financial crisis, some back to sort of 2011. Now, how did this impact other markets? Well, oil plunged. We know oil has been going down for a while. Currently, oil is trading, this is the crude oil, WTI, is trading around $38 a barrel, lowest since sort of post-financial crisis levels. And in the FX arena, like I touched on yesterday, we saw safe haven, low yielding currencies like Euro, Swiss franc, Japanese yen up. Currency and sort of commodity currencies down, like Australian dollar and Canadian dollar, and US dollar was also down. To give an extent of the movements, New Zealand dollar lost 8.3% yesterday, worst decline in the last 30 years. Australian dollar lost around 3.6%, trading at its lowest level in 5 years. Canadian dollar trading around sort of 11-year low at the moment. And on the opposite side, we saw yen have its best day since 2010, up 4.7% yesterday. Euro jumping over 1.17 against the dollar, highest level since Jan this year. Swiss franc also higher. So that's the sort of what's happening in the currency markets, and depending whether in the right side or the wrong side, again, it could be a good day or bad day. Now, looking at what's happening in the markets this morning, European stocks are rebounding together with US futures. FTSE 100 is up 1.3%, Stock 600 up 1.4%. Some calling it dead cat bounce, some a bit of sort of profit taking out by the short sellers yesterday. Some are calling it a bit of breather before sort of further downtrend. That's obviously something we have to wait and see. But this morning, equities are up slightly after taking an absolute hammering yesterday. That's it for today. Thank you for listening in. I'll see you again tomorrow.